Hello, everyone. Welcome back to the Rational Investors Daily Brief Recap. It is, where are we here today? It is Tuesday, 10th of December. You officially have 15 days to go and buy your G.I. Joe with the Kung Fu grip. Use that line in the Daily Brief today. Nobody really found that funny, but I thought it was funny. Anyway. Happy early December here. Of course, we've talked a little bit recently about coming into cycle pivots. So, wondering whether as we get closer and closer to the 1 year anniversary of last year's panic sell off in the stock market, whether we see some sort of market top come in here. That's what I'm thinking, but only time will tell. Lots of political stuff dominating the headlines. And of course, we've got the UK election coming up day after tomorrow. And on Sunday, we have the potential for a whole new round of tariffs to hit China. So people are humming and hawing about that. And lastly, what was the third thing that I talked about in the Daily Brief today? Um, oh yeah, OK Coin has a well, and actually I think almost all of these forwards contracts have an expiry coming up on the 27th of December. And it was just interesting that we were talking about it in the lounge today in the Daily Brief. OK Coin, their 3 month contract will roll into their 2 week contract as of Friday, and there will be a new 3 month contract listed. So, you could blame it on China trade and bearish sentiment in the market around that. You could blame it on OK Coin forwards expiries. You could blame it on, hey, this the market hasn't bottomed yet, and actually we're getting a whole bunch of weekly new sell signals. But the long and short of it here, this is going to be a bit of a challenging weekend for crypto, in my opinion. But we'll see what happens. Only time will tell. The chart deck that I put together for you freebies here today. The upper panel doesn't really change much because the conversation should be very consistent. Lower panel, if I have new ideas that I want to kick around, I'll change those on a daily basis. But in essence, start our conversation off where we always do: U.S. dollar index, U.S. hegemony, all that kind of fun stuff. Econs came out today, tepid. Didn't see anything that was overly exciting, but I did see one thing that caught my attention, talked about in the Daily Brief today, and that is U.S. worker productivity actually is falling. And what that means, of course, is inflationary pressure. But at the same time, too, the econs themselves are not seeing, huge industrial production numbers, that kind of stuff. So as a result, if workers are demanding higher wages, which we should expect to this part of the cycle, and they're producing the same or even less GDP with that, then that means that workers are less productive. Does it imply feds are going to raise rates, lower rates? I would actually make the argument that it implies that the impetus for the Fed to be on the gas pedal to keep rates relatively high because they don't want inflation to get out of control is building. But at the same time, too, we are very much sort of caught in this deflationary world. So ironically enough, seeing a little bit of productivity weakness inject a bit of inflation into the conversation in a weird sort of way. Actually, that might actually make the Fed relatively happy. Also, too, macro picture, we've got British elections coming up here day after tomorrow. So is there some position squaring around that? Tough to say. And then lastly, what I would say is risk on, risk off, Japanese yen itself. Interestingly enough, it's looking a little bit heavy here this morning. So where are we here? There we are. So we're not getting a huge sort of push out of the yen one direction or the other. You can see risk on, risk off, very quiet. You can see the bonds weren't too happy with that productivity number miss. And, I get the impression that basically we're at the end of the low interest rate environment, and now we should actually start planning for the next 35 years of rising interest rates. But that's big picture conversation. Just in the day to day, risk on, risk off, I think on balance, we have basically a mixed message here, but not a huge any range expansion. We talked yesterday, and of course more in the daily brief today, about the historical significance of Paul Volcker passing, and how I do believe that the market's sort of on pause a little bit around all of that. We should see state funerals, those kind of things. And also, too, big sort of uncertainty, unknown around what's going to happen on Sunday with this new round of tariffs. And I was sort of talking in the daily brief today that it's gotten to the point, I feel, and I've seen this before, where the market is almost starting to lose interest in whatever comes out of the executive branch's mouth. And it's sort of like, fool me once, shame on me. Fool me once, shame on you, but fool me twice, shame on me. I get the impression the market's sort of warming up to the idea that you can't really believe anything that's coming out of the executive branch's sort of talking mouthpiece. The Larry Kudlow, I've followed Larry forever, but I mean, hell, he used to be in the Reagan administration. But he's a big sort of, supply side economics, top down, trickle down economics, that kind of conversation. And he was coming out today saying, oh no, we're really close to a deal. We're really close. And the market's like, yeah, whatever. I've heard that message 100 times before. I'm starting to lose interest. So we'll see how that goes. And then, of course, too, he's got all his congressional stuff going on there, and it's heating up. And I actually put a tweet out the other day. I put the tweet out originally back at the beginning of the year, because, frankly speaking, I was actually shocked. And, of course, I have a hard time working with Twitter, but I can't show you the original tweet. Why, I don't know. I'm obviously doing something wrong here. But this was a reference to somebody back in January made a prediction that Trump was not going to make it through the end of the year. So I found it fascinating that we've got about 2 or 3 weeks to go. And, man, the rubber is really hitting the road hard here. And it's kind of... excuse me, it's coming down to crunch time for Mr. Trump here. Me personally, and of course, you know what I think, Brian thinks of people's opinions, including my own, but I don't think the vote will pass Senate, but nonetheless, it is coming down to the wire here. So, looking at the market in general, you can see stocks not really moving a hell of a lot. Same thing with oil, very muted market. Bonds looking a little heavy. They don't like that productivity number. And, of course, if we lose this trend line, start emming out on the other side of it, then we're probably looking for another leg lower out of the bonds. The gold market is hanging in here, but this is looking very heavy. And remember, we had showed just a moment ago that the yen really is not getting going here in earnest. We did break the downtrend line. Now, for the yen to actually be a buy, we actually have to see this thing W on the other side of this trend line. You can see it just fired an inside bar failure here today. And also, too, on the gold, I didn't really like the location of where it should have come in down a little bit lower. So I would actually like to see the yen crank down back against this trend line, maybe reload zones, test these lows, and then turn up. And then it's like, woohoo! So I'm a little skeptical about whether gold can actually really turn here from these levels. But one thing I did notice, and I've been talking to you guys in the public, and of course we talk about us on the site at length, is let's follow the gold stocks, right? The gold stocks, who's better to know the business than the people that are actually in the business? And of course, woo, look at that. Oh, she's running as we're speaking here. Woohoo! That's good to see. So we've talked lots to you guys recently about one particular little sort of intermediate size gold stock that I like. If the big boys are really rocking and rolling, and remember we talk about, Barrick has turned the corner and it's trying to hold its lows. Newmont has gotten all pissed off because they're not the biggest gold stock, so they're going to just go and buy their stock back in the marketplace. They're turning. Now, the interesting thing about a name like Alio is if and when the big boys like run out of gold to mine, What they often do is they just go and buy these intermediate companies that have existing mines working, and boom, all of a sudden now you're part of the big conglomerate. So that's one reason why I kind of like these intermediate names. But nonetheless, we now actually have this W is confirmed here, so I'm feeling much more positive about this trade. I like that idea. So the gold price itself, I could see a bit of weakness here, but what I really think is smart, especially tax loss selling season, this seasonality window, I really like the idea of going and hunting sort of intermediate gold names in here. And then if you can, VCIM, Venture Cap, I would really be hunting, really. And actually, I really like the idea of hunting VCIM names in the blockchain space as well. There's some fantastic deals out there right now. Looking at individuals' names, really interested in the pot sector, but more specifically, I'm interested in CBD. I do, I've looked at a whole bunch of the sort of marijuana, names that are supplying this, what do they call them, dispensaries here in Canada. I'm not overly impressed with pot itself, but I do like what I'm seeing out of this sort of CBD kind of environment. I absolutely love this David's Tea. I mean, this chart just is beautiful. This is a weekly price chart. Just gorgeous. And the interesting thing is it's actually sitting right at the weekly breakout level. A new sort of participant into the game, and a name that I've gone and bought, and I do like the location. I mean, if you look at this chart, you can see gaps down at the bottom end of the range, W's coming in, and gee whiz, they mentioned that they're considering getting into the CBD business and infused beverage business. So I do like this angle to the pot industry, and I wanted to sort of mention that today. Here are two names that I think I'm bullish on beverages. Go figure. So we're just going to let those work. And full disclosure, I'm long off of David's Tea from about 120, I think, somewhere down in that area, 120, 130. So I'm not touching this thing at all. But for new ideas to consider, I actually went and pulled the trigger on this Java, I think, off of the breakout here at $4. So it's caveat emptor. I'm not telling you what to do, not giving you financial advice. Frankly, I couldn't give a shit of what you do with your money. All I'm telling you is what I'm doing with my money. End of conversation. Crypto. Oh boy. Crypto looks challenging here. Ain't gonna sugarcoat it. I do like the idea of tax loss selling, market coming into lows into the end of the year. I love the idea of Ethereum's coming into the end of the year and turning. I'm not going to mention this symbol because he said he didn't want to go on record, but there is a name that my cohort here is really interested in. He figures it's the next Ethereum. And he's buying through here, if he didn't already buy. I'll leave that for him to comment on. But I really do like the idea of picking up cheap coin into the end of the year here. I don't know exactly where the bottom is. These weekly charts are still very much pointing down. There is no bottoms working here. And if anything, what we sort of painted on weekly, broiler chicken shows was we actually were setting up some battle lines on all three of the big boys. I do like the fact that we're in these green boxes. Green boxes are good. And, through Daily Brief today, I even said, if you're like, Brian, I can't time the market. I'm busy in my own career. I want to just build a plan that I'm going to be investing in these names when they are not frothy anymore. They're at the bottom ends of their ranges. I believe in the fundamentals, yada, yada, yada. Okay, well, this is Nanny Nibbles, little old lady risk management strategy. That's exactly what kind of environment we're in here. But make no mistake about it, there is no technical bottoms working just yet. So I don't really have a problem with people saying, all right, well, we're trading at the bottom of the range. I'll go and nibble. But timing wise, if you're like a timer and I don't want to sit on my money and just have it doing absolutely nothing for the next few years, well, then this isn't the time to really pull the trigger. And as I had pointed out, bull bear battle lines, you notice that, Litecoin has actually confirmed a weekly bull bear battle line fail here. The fractal low there off a stamp on Litecoin was 43.76, and today's low is 43.62. Uh-oh. So once again, lower highs and lower lows defines a bear. What does inside bar failures look like? It looks exactly like this. So right now we have to see where the hell this thing's going to go to the downside. Ethereum level to watch there on stamp, 144.15, sitting right now 145.37. Ooh, getting close. And Bitcoin still has a little bit of wiggle room. Low there, 70.87. We're sitting right now 72.03. So still a little bit of wiggle room on the corn, but it is an interesting tell that, oh boy, some of these names are starting to slowly erode lower. And what was interesting about Litecoin is we still have this AB equals CD. We still have 1.618. So my hunch is this thing's got a date, and the original double bottom, if I'm not mistaken, well, actually, no, it's all the way down there, right? But we're actually there's the original double bottom breakout there at 41. So still like the idea of it pressing lower. And remember, it broke first. So first broke Litecoin, then Ethereum broke, and then Bitcoin broke. So ironically enough, what should happen is first Ethereum shows a bottom, then, first Litecoin, then Ethereum, and then Bitcoin. That's probably how it's going to go. So, there's not a heck of a lot more I can add to this. Watch this, what's that number I said there? 70.87. Let's see how we act against it. I don't really like talking with the public about lower time frame setups, so I won't go into too much detail here. But, FYI, beautiful range trade shorts on the New York Open this morning, and we're debating on the site whether they just pulled an interesting range trade long setup here off 78.6 in this original bottom. And of course there is that 70.87 on this market at 70.8550. If we lose that, then that's the same as that Litecoin failure. And ironically enough, if we lose these lows, then really all you need to do is just replicate this range, project it off of the bottom, and it'll probably tell you our ultimate target. So the war at 78.6, day traders, this is classic pit trading kind of conversation here. I could definitely see the range traders interested in this market here. The only thing I'll leave off with here for your free video here is just simply if you're interested in the altcoin market, I thought it was fascinating that number one, they actually, and so typical crypto, thumbing their nose at the world. They basically just said, look at, we're going to create this swear word perp index. And it's so funny seeing old gnarly market timers like guys like John Bollinger that I went to conferences in the 1990s and used to listen to him chat and instruct on how to use Bollinger Bands. So seeing on Twitter him saying, I'm not following Doge anymore, I'm following the shitcoin index. I mean, that's hilarious. You can't write better fiction than reality. So, I mean, you want a simple proxy as to whether the alts are back. I think you just simply got to find W's here. And really good anecdote of market state. V bottom, M top. Boosh. V bottom, M top. Boosh. V bottom. Uh-oh. Here comes another M. And it's an excellent analogy of market state. If you see lots of M's and you see V bottoms, well, that's probably a bear. The interesting thing about this, and I don't know whether it's usable information right now, but you can actually see volume divergence here. Now, that might be a function of this index. I don't know. We are coming down to the bottom of value and, candle body lows. So really the key here is, can we test this low, kind of like what we did here? You notice this low went slightly lower, but can we test this low, turn around, head back up, double bottom, and start the bull process? Right now, not a hell of a lot to work with off of sort of the bigger indexes. So The message that I've been saying recently, and I think it's the same message, I don't think anything's changed, is this is a coin picker's market. And the scary thing here is you have to be very careful. Don't chase. And here is exactly the reason why we don't chase. In one day, boosh, they basically took the entire bull run back. And what's fascinating about this, please try and learn this. This market did not crash. This market did nothing more than just pull back to the original bottom. That's it. And, the whole point of us building trading plans and trying to vet this is, of course, this is incredibly high anxiety. I mean, there were probably fortunes lost through this, and people probably were pulling their hair out because they didn't know what to do. But the irony of all of this is you can see the original double bottom. You can see the run-up. Would anybody at TRI even be the slightest bit interested in buying this thing here? No way. And what's really cool about this is we actually had a lot of TRIs. Colin in particular, fantastic trader. He actually was hunting shorts up here. And I don't know, was that the right line of thinking? I think so. So it's just an interesting analogy. For heaven's sakes, if you buy these W's and you see this, you gotta ring the register, sell halves on doubles, whatever. You gotta pay yourself, because this is very much a conversation about crypto and venture capital. This can happen out of nowhere. So really interesting analogy of market state, coin picker's market. Don't fall in love with these things. Make sure, damn sure, to pay yourself when these things do pay you off, right? When they, how's that line go? Make sure to pay yourself when the market affords you the opportunity, right? And of course, interestingly enough, I might actually argue that this was actually just an incredible buying opportunity down here. We'll see how it goes. Only time will tell. But really great analogy of everything that we teach on TRI. And please, everybody, try and learn this stuff. It does work. Okay, so I think I'm going to leave the conversation at that for today, guys. Sure hope you enjoyed the free offering. Of course, we do this Monday to Friday, full hour. In fact, actually today I think it was about an hour and 20 minutes. Interaction with the community. And I absolutely love the way the community is really working together. 1 + 1 = 3. All the best. PMA for the win. Have yourselves a great day. And bye for now.